Welcome to the Money and Mortgages podcast. I'm your host, Adam Coleman, accredited financial counselor and mortgage planner. Join me as I speak with fellow industry experts on all things personal finance. Welcome, everyone. This is your host, Adam Coleman. And with me today, I have Kelly Berenbaum, who's a certified financial planner and founder of Blue Tree Financial in Florida. Today, we're going to be talking a little bit more about financial considerations for business owners. So I wanted to have Kelly on there. That's her specialty. So Kelly, welcome to the show.
Thank you so much for having me, Adam. I'm excited to be here.
Absolutely. Well, I guess what made you kind of gravitate towards business owners? Because I know you do financial planning for a whole, range of people, but that tends to be one of your focuses. What made you kind of go that direction?
Yeah, I'm a flat fee financial planner, which means that for my services, I'll charge an annual flat fee, and that may include investment management, but it really is focused on financial planning. And that tends to be appealing to business owner clients or corporate employees who may have their primary wealth locked up in a 401k, for example. What I found when I started doing this is I really enjoyed working with business owners because they were doing such interesting things, After 30 years in the corporate world in financial services and then starting my own business, I really enjoyed just meeting people where they were, hearing about their personal stories, how they built their businesses, the sort of unique value that they bring. Some of my clients are in the construction industry and they're just creating these beautiful either experiences or rooms or landscapes that are going to be enjoyed by people for years and years and years to come. So that sort of like just really enjoying people and what they've built is a big part of it. And then having moved from the corporate world to being a business owner myself, I started to really appreciate the complexities and the risks that they've faced to build what they have. And I really enjoyed those types of challenges. I can relate to that now. And I like being the co-planner, the one who's their partner in helping them figure out their financial lives so that they can continue to do what they love.
Nice. Well, why do you think they gravitate more towards the fee only side, or the flat fee side versus the others?
Well, a lot of business owners, their primary wealth is in their business. So, the traditional financial services model is assets under management. Typically an advisor will want like $1 million or more, and you'll come to them and they want you to sort of bring that over to their firm. They'll manage it for you. They may, to varying degrees, give you advice. Some is very simple. Some can be more complex with the bigger firms, but they're always going to be charging you a percent of assets under management. So the industry standard now is about 1%. So on $1 million, that's $10,000 a year that you're paying and up. So if you've got 10 million, you're paying $100,000. And I guess the question for me was always, what are you getting for that? Is there really more work involved? And what I found in the business owners that I'm working with, conversely, is they may not have that level of assets under management. So they may not have gotten attention from the industry in the past. So they're not getting the advice and the planning support that they need because their net worth is tied up in their business, which may be worth $10 million, for example, but they don't have it to hand over to an advisor to charge a percent of assets under management. So what I'm finding is, the business owners that I'm working with also have that independent spirit. I've built this, I will pay you a fee, and I'll pay you for the value that you provide to me, but I want your advice and I want it to be independent, and I want it to be independent of any assets that I share with you to manage. So
Gotcha.
that's what I have found has been part of the appeal of the flat fee model.
Yeah, that makes sense. I mean, they're certainly underserved if you don't have a lot of assets. Like you said, a lot of the wealth managers are so focused on the high net worth, aspect of it, or the high investable assets, not even net worth. And some of these
Yeah.
business owners might have huge net worth, but nothing to really invest in necessarily beyond their business. So that certainly makes sense.
I think there's another aspect of that too, like in the exit planning world. So I'm also a certified exit
Mm,
planning advisor. And what I found is the wealth managers in that space, particularly the ones associated with the big firms we've all heard of, they may have fee for service to help them get to an exit, but they're really driving towards that exit and
right.
the assets that can be transitioned into that assets under management model. And I'm agnostic to what you end up doing. I think business owners need to be thinking about their exit because we will all exit at some point, preferably
Right.
on preferably on our own terms, in a way
Hopefully,
that
yeah.
supports our life and our lifestyle. But I think there are various options that may or may not be a sale. It could be transition to the next generation of your family,
Right.
if you're a family-owned business. It could be transitioning to employees. There are things like employee stock ownership programs or option programs that allow business owners to take money off the table without actually selling the business. It may be management-led teams. So there are a lot of different options. And I think having this flat fee model and having that exit planning expertise allows me to, again, let's put all of the options on the table and figure out what the owner's values are and what their priorities are, and then work towards those goals, keeping the exit strategy flexible.
Right. Well, take away as much of the conflict of interest as possible, just so that the advisor is not looking at that exit strategy as some kind of lottery ticket. They're like pushing towards it more than they
Yeah.
probably should, because that's where obviously their money is coming from. So that certainly makes sense for sure. I think most people kind of gravitate toward that W-2 salary, and they kind of understand some of the financial planning aspects to that, but business owners kind of have a whole different world to play in. So, what are some of the biggest advantages to being a business owner from a financial planning perspective?
I think the flexibility in how you manage your income. I think there are tax advantages to being a business owner, but there are also commensurate risks. So you really need to think about things holistically, and I think engage the right professionals to help you sort that out. So one of the bigger opportunities I think for business owners is diversifying their wealth. So we talked a minute ago about if your business is your primary asset and that's the majority of your net worth, what happens if there's another pandemic? What happens if there's a downturn? What happens if you're not able to work in it? So there are types of things where I think as a business owner, starting to think about their business as an asset and diversifying that wealth becomes important, or even diversifying their time. A lot of the business owners that I work with, they're in small businesses. So let's say $2 to $10 million in revenue. And they may have started that business because it was something that they love to do. They created
Right.
value, they saw the benefit, and they continued to grow it, but they weren't really thinking about it in terms of growing enterprise value, growing a business that they were either
Right.
going to, that was going to serve their family down the road, and how they were going to think about that holistically. So I think that idea of separating your business finances and your business strategy and goals from your personal finances and your personal financial goals is really important, and something that I help business owners do. And part of that is that's very personal too. If this is your baby and you've built it from
Right.
the ground up, I'm certainly not going to take that away from anybody. But let's think about, like, who are you as a person, and what do you want, and what are your values in life, and engage the family. The partners, the spouses. What are you looking for in your personal financial life and your personal goals, and how can we look at the picture holistically and make sure that these things are complementary.
Right.
And you're sort of like diversifying wealth but also diversifying risk.
Gotcha. And how do you balance that? Because I mean, I hear from a lot of business owners that obviously the idea is that any dollar that you put into the business theoretically should have a better rate of return than most anywhere else. So how do you balance that, where you want to throw as much money into the business and scale it and hopefully make it grow, versus diversifying away from that to have other investments that you're not falling into this all eggs in one basket type of mentality?
Yeah, I think that's having clear business goals. What are your growth goals for your business? How well is it doing? How well are you performing? So knowing your numbers on the business side, knowing what your revenue and growth goals are on your business side, and then being able to allocate capital investments. And I think there's a question of, do you personally reinvest every dollar? Do you have outside investors at some point? I don't have a strong opinion on that one way or the other, but I think it's a matter of really articulating your goals. And what I've seen is business owners, again, it's their baby, they've built it, and it becomes like their life force goes into it.
Right.
And I think that's okay. I mean, I recognize that I'm doing that with my own business right now, but I think it's a matter of getting your arms around the numbers, getting really clean financials, knowing what your progress looks like, knowing what your realistic growth plan is, how you're going to support that. And then looking at the bigger picture again, like, how does this business support my life? And that might be, depending on the type of business you have, maybe it's the salary or the distributions you pay yourself, and you take that, and now you're thinking about what is my personal cash reserve look like if my business needs X. What am I investing in my business versus I'm investing in education planning for my children or my vacation property or whatever the case may be. So I think it's identification, it's clarification, and
Right,
then it's
right.
getting really good metrics around what's happening now and what you're trying to get to in the future. And that's how a plan emerges.
Gotcha. I guess, do you get into any sort of like concentration percentage? Like, is there a calculation that you could even do with a business owner to figure out like how much of their money is going towards their business versus outside financial planning investments, things like that? Or does it ever really get that type of equation in your mind?
I think that's a hard conversation to have, and I don't start there.
Right,
If you wanted a proxy in the industry, there are, levels of concentration. Like for a W-2 employee, if they're invested in their company stock, typically,
right,
you don't want that to be more than 10% of your overall net worth. I think when you've built a business from the ground up, it's really hard to say, oh, it shouldn't be. I would never say it shouldn't be more than 10%. It will
right.
always be more than 10%.
Yeah, that'd be hard to keep it less than 10, but
So I think there are some, I don't think that's an easy conversation to have. I think, and I would never start there. There's no
right,
like target or framework or formula that I would come in and apply. I like to start with any of my financial plans. Let's look at where you are today. Make sure you and I both understand holistically all of your financial assets, all of your risks, the
right,
things that their strengths and weaknesses, and all of the levers that are available to you. And then we talk about what you're trying to accomplish and how best to use the levers that you have to get to your goals. And then within that, we can maybe look at outside metrics as benchmarks to help guide us. But it really has to start with, what do you have? What's available to you? What are you comfortable, changing, if
right.
anything, and where are we trying to go?
Nice. Well, I know one of the big ones, and obviously the biggest differentiator between, I guess, business owner versus W-2 employee is just the tax consequences that are the tax planning considerations that you can really get into as a business owner. So, can you maybe speak to some of the significant, impacts or differences between a business owner versus W-2 when it comes to tax planning?
Sure. Well, I'll start with W-2 because that's kind of easy.
Right,
You're paid a salary, your employer deducts your employment income, they deduct your Social Security taxes and your Medicare taxes, and you get what you get at the end of the
right.
day. And
There's not much
and
you can do there.
and you're expected withholding based on your family's income, right? And so, like, you may be able to adjust that withholding a little bit more or less to try to match what your expected taxes is at the end of the year, but it's pretty well fixed. It's easy to determine. If you are a business owner, you have a lot more going on, a lot more flexibility, a lot more options in terms of how your business is structured. If you have sort of lumpy income, like, can you match that up to your expenses so that you have lower taxable income? You and I have talked about, you don't want to show, you still have to show some level of income if you want things like mortgages.
Right. It's a whole
So,
different ballgame
so
for
I
business
think,
owners there. So,
with business owners, I think one of the most important things from a tax perspective is to think about the business entity structure. So just to give a couple of examples, pass-through entities like S corps may have tax advantages because you can pay yourself a reasonable salary, and then distributions, you have fewer withholdings that you're required to take
right.
above that reasonable salary. Again, always making sure that you're within IRS requirements, and I'm not giving any tax advice or planning advice today. This is all just informational. Other things with pass-through entities are qualified business income deductions, where you can deduct a part of your income, usually in service industries. And if you're in a state that has a state taxes, you can pay your state taxes through your entity, which effectively works around those SALT caps that were implemented a few years ago. So those are some advantages of that type, pass-through type entities. Then there's the C Corp entity, which, traditional corporation. The downsides of that are double taxation. So the entity itself is taxed at the corporate level, and then any dividends that are passed through to the owners are taxed at their rate. Could there be qualified dividends that offset that? Yes, of course. The big advantage to a C Corp, though, is if you have outside investors, because you can have different share
Mhm.
classes in your C Corp. Also, there's a thing called qualified small business stock. So again, you have to really think about all of this in advance, but depending on how you either bought or started your company, if you qualify for that QSBS, you may be able to exempt your income when you sell the business or a portion of it or pay capital gains taxes. So there are benefits to it as well. It really just depends again on what you're trying to accomplish, what your needs are, where you are today. And I like to work with CPAs and business attorneys to make sure we've got this right. Sometimes, I'll work with business owners who've had their entity set up for a long time and they're like, it's worked fine.
Right.
Okay. That's fine too. Let's just double check and make sure that that aligns with what you're trying to accomplish today and what I see in front of me. And many times it does. But I think reviewing what your business entity structure is, what it does for you, what you can take advantage of is really helpful.
Are there some general rules of thumb of like, all right, let's say somebody starts off as a sole proprietor. What do you look for generally before they take the next step beyond just the standard sole proprietorship if they wanted to kind of scale up?
Well, even if they were just starting, I'm not a big fan of sole proprietorship, depending on the type of business, because you've got liability. If
Right.
something happens and you're sued as a sole proprietor, then your personal assets are at stake. So I would always recommend starting with at least an LLC so that you've got an entity that is on its own. So if something happens in the business, you have a judgment against the business, your personal assets aren't at risk. And then I think it really depends. I think I would, want to get into specific circumstances and look at, revenue before I could really make a determination.
Is that kind of the big one in your mind, is kind of just the revenue to decide if the next step is worthwhile or just to stay where they're at? Or is there other major considerations
Revenue and
besides
growth
the revenue piece?
plans. Revenue and growth plans. If you
Yeah,
plan to stay as the solo business owner indefinitely,
right.
then I think there's probably plenty of runway with LLCs, taxes, S corps, for example. If you want to bring on partners or outside investment, or your growth and exit plans are such that you need that qualified small business deduction, then you really need to think about C corps. But it really depends on what your goals are. I don't think that there's a dollar threshold per se. It really depends on where you're going.
Gotcha. Okay. Well, and I know taxes are obviously a big one. Retirement plans are a whole different ball game. That's all different when it comes to W-2. I think W-2s kind of have it pretty easy. They either have a 401k, maybe they've got an IRA. There's not really a whole lot of complexity to it. I know that's totally different with a business owner. So can you maybe speak to that a little bit of like what are the self-employed retirement plan options? What are the kind of the pros and the cons between each of those at this point?
Yeah. So if you are a W-2 employee and you're thinking about retirement plans, it's really what can I save as part of my salary deferral? And then you may, depending on what your company has put in place, you may have matching contributions or profit sharing contributions, et cetera. When you're the business owner, you are choosing those plans for
Right.
yourself and your employees. And I think there's some flexibility there. It also, I would say, leads towards the exit as well. So I'll talk about that in a second. But for individual business owners where there are no employees, like they may have vendor partners, but they don't have anyone who is working for their firm directly. I love the solo 401k because it's really easy to implement. They can defer part of their salary as the employee deferral. They can also, if they meet certain requirements, they can, as an employer, make contributions to their solo 401k plan. Those plans also have regular pre-tax and Roth contribution options. I love the Roth contribution options, but you're paying taxes today. It's a question of, do you pay taxes today and have that growth become tax-free down the line, or do you put something in a pre-tax plan and then pay taxes when you take it out later? Some clients, you'll have the conversation about, do you think taxes are going to be higher or lower in the future? Do we think your income is going to be higher or lower in the future?
Right.
Um, I can't think of a case where a client has been like, I think taxes are going to be lower. I want to put more in Yes.
That's usually a pretty easy one. The income might be different, but I think we can all assume the taxes will be higher.
Exactly. But sometimes, if we're worried about staying under a particular tax bucket in a given year, we might balance those
Right.
two. So I love the solo 1K, 401k for individual owners with no employees. I think when you start to have teams or employees, I like the other flavors of 401k. There are a lot
Yeah.
of different models. There's the traditional 401k, there's the safe harbor 401k. I've seen a couple of different flavors of it, but essentially they're well-known plans. They're going to have various administrative costs depending on what plan you choose. But again, the thing with the 401k is going to be like making sure you're within the IRS rules, because if you have a 401k plan, you need to make sure that you're not benefiting highly compensated employees over less highly compensated employees. There are a lot of rules and discriminatory testing around that. So in those cases, when I'm working with a client who needs that, we have partners who are experts in retirement and pension plans, and I usually just bring them to the table, who would also be like fiduciaries and flat fees. So
Like
for
an
me,
actual
both of them.
401k provider, you mean, or somebody else that's just advising on the 401k?
So like an administrator,
Okay.
like a third party administrator who helps set up the plans, does the reporting, make sure all of the IRS guidelines are met. And then I may or may not like manage the assets in the plan.
Right.
But I'll definitely help the business owner choose the investments that are available
Gotcha.
to them and to
And
their
they've gotten a
employees.
lot better. I mean, that used to be the big problem just because they were so expensive, but
Yeah.
there's so many different cheaper options now. Are there specific ones that you prefer, like in terms of 401k vendors for more of the small business side of things?
I don't have one that I would name specifically. I've got a network of partners who do that. So depending on the business owner, the size of the company, then I'll reach out to the appropriate partner and bring them to the table, or introduce the client to the appropriate partner and let them
Nice.
decide.
Yeah, I know they definitely have a ton of good options now that were not there years before. Like people were having to do like simple IRAs and just random stuff like that. Just 401ks just have become so much more popular and prevalent now. Do you even see simple IRAs much anymore, or is everybody kind of transitioned more to the 401k?
I don't. But again, I think it's because 401k plans are just so well understood.
Yeah,
Um, you can find a lot of partners who are doing it. And there are so many different flavors of it now. I think it used to be with particular plans, you had to always contribute a certain amount or nothing, or if you
right.
contributed for the owner, you had to contribute to the employees. And that non-discrimination is still true and important, but there's a lot of flexibility in how you set that up so that you can manage the cash flow for your business. So what I'm finding is the 401k seems to reign king in most situations. Like building on that a little bit, kind of talking about the benefit to the business owner. It's not just in what the business owner can put away for themselves in savings or what their employees can save. I think it's also you get tax benefits for being able to contribute to like the matching contribution or the employer contribution to a retirement plan. So there are benefits to the business owners for that. On the employee side, if you've got benefit plans that help them build their own wealth, that helps keep people with your company, creates longevity, I think, for your employees. I've seen a lot of good cultures, usually the businesses that have good cultures, they want to take care of their employees are happy to be there, there's a mutual benefit. And then the other big thing with some types of retirement plans is this employee stock ownership idea. So the idea is that the business can buy shares of the company from the owner. So the owner can have a potentially very significant liquidity event, and the shares are held in trust for the employees, and the employees may bet there's vesting schedules that it gets paid out over time. But it's really advantageous when you're trying to build a management-led firm. So that might be a situation where you don't have to sell the business, but you can effectively exit, take money off the table, empower your management team, and continue to have a portion of ownership where you're benefiting the growth of the company. I love them. You have to have a pretty significant level of revenue in the company because there are pretty significant administrative costs associated with
Right.
those types of plans. But it's fun to see, again, like going back to the business planning side and the growth planning side, if you know what you're trying to accomplish and you can put those metrics in place and you can get there, now you have all of these other options available to you and flexibility on how you want to go forward.
What is the traditional method that you're seeing people do? Are they typically creating like an exit strategy where they're just selling it off to somebody? Are they typically keeping it in the family, or is it just all over the map? Everybody's different.
I think, and I believe research from the Exit Planning Institute would support this as well. Most owners haven't thought about it.
Right.
They just know
It just
they've reached a
happens.
level of complexity, with their business and their life, and they're like, I need to figure something out. I want to spend less time on my business. Maybe they're frustrated and I just want to sell it and get out. And until we really sort of look at that. And there's a whole other side, like I don't get too much involved in this, but there's the whole brokerage of business if you're planning to sell, and there's that whole
Right.
side of the industry as well. And I think some people have been like, I talked to a broker, this is what I can get. Like, what does that mean for my personal financial plan? Like,
Right.
okay, well, do you know what you're going to need to live off of your cash flow now and after you sell your business? And is the sale of the business going to support that? Or maybe we have to wait a few years.
Right.
Any number of things could happen. What leverage do you have on the personal financial side? Pay off the house, and build your investments outside. Or maybe we need to get some outside consulting help to grow the business to where it needs to be so that when you do sell it, it will support you in your retirement for the rest of your life. Sometimes that's like the last and biggest paycheck a business owner might get. So we really need to think about, is it going to be enough? What are the tax implications of that sale as well, if you go down that path? So coming back to your question, I don't find that a lot of business owners come in saying, oh, I need an exit plan. Most of the time, they either don't want to exit or they're being
Right.
pressured to exit for some external reason, and they just need to figure it out. I've also seen a situation where, the spouses are like, we want to sell, but I need to know we're going to be okay first. Help
Right.
us, and help us put that picture together. So I really enjoy that aspect of it. When you've got clarity, then you have confidence and then you can move forward.
Nice. Is there any last other, final bits of advice for anybody that is self-employed or going through this? What are the major considerations that they should have in mind that we haven't talked about related to financial planning on their side?
Yeah, I think that biggest thing is just to start thinking about your business in terms of the asset that it is, the engine of growth that it is for you and your family, and start to think about that separately from your personal finances. And what is your goal associated with that, and how does it serve you personally? And then I think there's really good synergy, and that sort of thinking will also lead to all sorts of good practices about clean financial records, separating business and personal finances, thinking about goals, figuring out what professionals you need, et cetera, et cetera. So I think it's being able to at least, sort of get your head up out of the day to day for at least a minute and start thinking about where do you want this to lead you, and then go from there.
Perfect. Well, that's great advice. Well, Kelly, this has been super helpful. If somebody would like to learn more about you and your firm, what's the best place?
You can find me on the web at bluetreefi.com. You can also call me. I'm in Winter Park, Florida at 407-434-1616. And I'm Kelly Berenbaum. You can find me on LinkedIn, primarily and my website. So I'd love to talk to you.
Well, I'll make sure to put the website in the description on the YouTube video. So definitely give it a check. This has been super helpful, Kelly. I appreciate all the insights.
Thank you, Adam. I've enjoyed our conversation. I appreciate the
All right.
time.
Thanks, Kelly.
Bye.